Given that the ban on new diesel and petrol automobiles in the United Kingdom has been brought forward to 2030, as well as the Bipartisan Infrastructure Plan in the United States, the potential for electric vehicle investment has been increased in recent years. Very much a desirable investment opportunity, investors are now taking advantage of a once-in-a-lifetime opportunity to participate in a market that is being mandated to change swiftly from one technology to another in a very short period of time. Cathie Wood, an investment fund manager, will be the focus of our conversation today as we examine her approach to EV and her latest portfolio entries. Stay tuned for that. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar videos. Comments are loved and featured in our upcoming videos. In addition to managing her ETFs, Cathie Wood is a well-known star stock picker who specializes in managing portfolios that are focused on disruptive innovation. Cathie Wood founded ARK Investment Management in 2014, and the firm now maintains a portfolio of assets worth more than $53.7 billion, with holdings centered in blockchain, financial tech, electric vehicles, genetics and genomics, and artificial intelligence. The ARK Innovation ETF, which is Wood's flagship fund, gained 152% in 2020. An electric vehicle manufacturer like Tesla and telemedicine company like Teladoc Health Inc. are some of Wood's biggest investments in the ARK Innovation Exchange Traded Fund. Recursion Pharmaceuticals, Berkeley Lights, and Verve Therapeutics are three recent biotech company picks that Cathie Wood has added to ARK Investment Management LLC's portfolio in 2021. The hedge fund manager surprised many by establishing positions in blue-chip stocks such as the Walt Disney Company and e-commerce platform Etsy during the first half of the calendar year. Tesla is a favorite of Cathie Wood, but it doesn't mean that she'll be holding on to every last penny of it forever. As a matter of fact, her investment management firm just went on a Tesla stock selling spree. Following the release of the firm's daily trading update, Wood's ARK Investment Management announced that it had sold more than 340,000 Tesla shares across three exchange-traded funds. Even after the selling spree, almost 11% of the popular ARK Innovation ETF is still banking on Elon Musk's company. When the shareholding rises above 10%, the firm has a tendency to reduce its investment. When it comes to rate-sensitive investing approaches, Tesla has outperformed the market in general, but ARK had one of its worst sessions in months during the final week of September. While everything was going on, overnight statistics revealed that the professional investors pulled out $297 million, the biggest since March 2021, bringing the outflow to more than $660 million. On the other hand, Treasury yields have risen sharply since the Federal Reserve hinted that it will begin to unwind its massive stimulus program, sending a tremor through the economy's growth stocks. Because of Wood's emphasis on disruptive innovation and technology, ARK funds have significant gains because of exposure to such names. Tesla continues to be Wood's most valuable investment, serving as the company's largest position in both flagship ARK fund and the overall firm. She believes that the company's stock will climb from its present price of $780 to $3,000 in the future. ARK, on the other hand, frequently reduces its stake in the automaker when the company has performed very well or has grown too large in the portfolio. In September, the Tesla stock had gained 5.7% compared to a 5.2% decline in the NASDAQ 100 Tech Index. According to the China Automobile Manufacturers Association, sales in the country totaled 12,885, representing a 49.5% increase over the previous month of August 2021, despite the fact that global sales in the world's largest automobile market decreased 15% from the same period last year. Even though China is a significant source of revenue for Tesla Motors, the company is facing increased scrutiny from the Chinese government over its data storage policies and general brand erosion as a result of the virtual June 2021 recall of 285,000 cars. Nearly all of the company's China-based deliveries over the previous 5 years linked to an autopilot software bug. The fact that Cathie Wood is selling its Tesla stock could be because of this reason. However, as we previously realized, the investment management fund ARK prefers to hold back or sell shares in companies where their shareholding increases more than 10% or exceeds their industry by a significant margin. Cathie's new portfolio entry. On August 5, 2021, Cathie Wood disclosed that the hedge fund owed 11.8 million shares of UiPath, valued at $806 million, according to its SEC 13F filings. This represents around 1.5% of the total assets under management. In addition, the firm has 353,000 shares of Etsy Inc., which is worth more than $72.7 million and accounts for 0.13% of ARK Investment Management's holdings. The company's other assets included 5.6 million shares of Coinbase Global Inc., which was valued at $1.42 billion and represented 2.64% of the company's total holdings. Additionally, ARK Investment Management LLC holds 152,000 shares of the Walt Disney Company, valued at $26.7 million and representing 0.04% of the company's total holdings. With these companies are the four most recent additions to Cathie Wood's portfolio for this year. What all of these companies have in common is that they have performed in a manner that is comparable to the Nasdaq. Perhaps this is what Cathie has been looking forward to, a more solid stock to add to her portfolio, and the reason why the Tesla shares were sold off. While Tesla had a 5% return last month, Lucid had a 17% return, much surpassing the market and Tesla combined. This is in contrast to the market's negative 5% return, which was much worse. EV sectors are unquestionably the hottest trend in investment funds right now, and fund managers are keen to be cautious when it comes to investing in these highly valued securities. That could explain why Lucid isn't in Catherine's portfolio, as well as why Tesla shares have been reduced in value. Investors who are worried about the environment have flocked to the electric vehicle market. However, if you want to put your money where your spirit is, you're not limited to the volatile stock market as a means of doing so. Take, for example, cropland in the United States of America. It isn't quite as intriguing as EV stock, to be honest. Agricultural land, on the other hand, is fundamentally valuable, despite the fact that the market finds it difficult to evaluate the worth of electric vehicle firms, which is why stocks are often volatile. I'm curious to hear what you have to say. Do you believe that EVs surpassing the index on a consistent basis is a negative thing or a positive thing? Would you take a chance on a high volatility stock in order to get a bigger and faster return? Or would you prefer to be on the safe side? Let us know what you think by leaving a comment below. Matthew is confident that the ARK of Cathie Wood is interested in Lucid stock. In his opinion, ARK makes investments in a flash and has been leveraging quantum computing technology. Furthermore, he adds that once Lucid begins delivering the sedans, the stock will never fall below $30. With Lucid set to deliver in late October, it appears that Matthew's prediction is becoming a reality. That should wrap things up for today. Keep in mind that subscribing's still free and liking the video helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.